Hey guys, it's Thomas Morrow here with Business Intel, and today we will be discussing stock. I'm sure a lot of you have heard about the stock market in the news about how it's hitting all-time highs or how it has struggled. There's a lot of data out there that can be overwhelming and difficult to understand, so our goal today is to help you get a brief understanding of what stock is and how it can benefit you. Let's say you're a business owner and you own a lemonade stand. You're looking to expand into different areas across town, but you don't want to take out a loan that'll require an interest payment every month to finance this expenditure. So, what can you do? You can sell stock of your company to an investor. Stock allows people to have a small piece of ownership into a company. This allows them access to the profits, which can be paid out as a dividend, as well as gives them voting rights where they can vote on important issues within the company. Once you own the stock, you will be referred to as an investor or as a shareholder. Let's view stock from the business perspective first. When you sell shares of your business to the public for the first time, this is referred to as an IPO or an initial public offering. To give you a real-world example, Coca-Cola had its IPO August 26, 1990. Ever since that day, the general public has been able to purchase ownership within the company. The purpose of an IPO is to raise funds to reinvest in the business with the purpose of growing the business. If your lemonade stand sells 100 shares to the public and they are all purchased, the business will have raised $100 in funding. When a company decides to sell its shares to the public, the owners of the company are lowering their percentage of the company they own. For example, if your lemonade stand has 1,000 total shares and you decide to sell 100 of them, you will lower your ownership percentage from 100% to 90%. Now let's view stock from the investor's perspective. People are going to invest into shares they believe will appreciate in value over time. The point of investing into anything is to buy low and to sell high. It's much easier said than done, of course, but once the value of the stock goes up, you can take your profits and reinvest them into something else, or you can buy yourself something nice. The choice is yours. Another reason why people buy stock is because of their dividend payments. Let's go back to our lemonade stand example. After you sell the stock, you tell your investors they will receive a 1-cent dividend every quarter, and after 1 year of owning the stock, they will have received a total of 4 cents. An investor will receive their dividend payments through their brokerage account, such as E-Trade or Robinhood, or through several others. You can also receive your dividend payments by mail if you want to. However, there will be a cost to ship the dividend check to you. Dividends make the investor happy because they see an immediate return on their investment, so they're more likely to hold the stock for the long term. We will go back to Coca-Cola for our real-world example of a dividend payment. This year, the company will pay a 41-cent dividend every quarter. This means at the end of the year, an investor will receive $1.64 per share in dividend payments. Warren Buffett will receive $164 million per quarter, or $656 million this year just from Coca-Cola dividends alone. However, not all companies pay dividends to their investors. These types of companies are called growth companies, because rather than paying you a dividend, they're putting all of their profits back into the company so they can continue to grow in size. An example of this is Tesla. They currently do not pay a dividend as they are trying to expand their market share in the automotive industry. The reason why this may be beneficial for some investors is because they believe the stock price will increase over the years to make a good profit, or they believe in the near future a dividend payment will be made. Hopefully this video helps explain what stock is and how it is beneficial to both the company and their investors. Make sure to like, subscribe, and hit the bell icon to be notified when we upload our next video. I'm Thomas Morrow from Business Intel, and I'll see you in the next one.